Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 8th of July, 2016. Let's look at this market. Just a couple weeks ago, there was a ton of red on this screen, and now you can see the S&P is positive year to date, 4.3%, and it was just down year to date a week and a half, 2 weeks ago after the Brexit nonsense. Anyways, positive week for equities across the board, and oil got hit, but let's take a look at the indices and see where we are. This is actually a 52-week closing high here today on the S&P 500, and we're close to the all-time highs of 213.78. And keep in mind, of course, that if you adjust it for dividends, which aren't shown on this chart, then we are actually at new highs. So very impressive turnaround. And once again, from failed moves come fast moves. When we see the market wash out, and as we know, it found buyers at the year-to-date volume-weighted average price a couple weeks ago. And then looking at an intraday time frame, as we got back above that 5-day moving average, we of course did have a holiday shortened week that started out on a somewhat weak note, but on Thursday we pulled back to the 5-day moving average, which was also the conjunction of that week to date volume weighted average price, and obviously we exploded higher here today. So that was twice this week that we saw the 5-day moving average hold as support, the rising 5-day moving average. And when we look at the action today, of course, it was a gap up, and anyone who sold short, obviously is not listening to the message of the market. The message of the market, when we are above the rising volume weighted average prices, you look for potential levels of resistance like R2 or maybe R3, but there's no sense in shorting while the momentum remains higher. So again, very impressive week for equities, and I was thinking that we would most likely spend a little bit more time underneath this level before the market exploded the way it did. But obviously, as I'd been mentioning on Twitter, we had been building energy, and that these higher lows were indicating that the buyers were in fact gaining control. It was in a webinar yesterday for subscribers. Someone asked me what I thought about the bigger picture in this range, and what was it going to break down. And my observation was that we once again had the rising 10, 20, 30, and 40-week moving average, and that we had an important higher low on this weekly time frame, that energy was building. So here we are, looking like we're launching out to new all-time highs in the S&P 500. It doesn't mean you can just buy at any single point. You have to do so with a place where it makes sense based on a reasonable stop for your comfort level. So we've seen this market, though. Keep in mind it's gone from 199 to 212, so a little bit more than 6.5% in the course of 2 weeks. So a lot of times what we see with breakouts and in indexes and individual stocks is that when a market breaks out, it gets a lot of attention. People say, hey, it's breaking out, it's a new high, but you have to ask yourself, how did it get there? So a lot of times what we see is that we get a breakout and then a quick pullback. So I wouldn't be surprised to see that happening if we do get on to new highs next week. Let's take a look at the Nasdaq now. Nasdaq in much better shape, obviously. It pulled back down to that 50-day moving average and on Tuesday, and then closed sharply above it on Wednesday. And here, obviously, we're continuing to see follow through to the upside. We have the potential for resistance up in this area that has been troublesome to this market in the past. But again, we see that, looking at the year-to-date volume-weighted average price, we're well above that. We're above all of these longer-term moving averages, and obviously the Nasdaq is underperforming relative to the S&P 500, but it's most likely looking like it's building energy. I think the preferred scenario would be for it to maybe break beyond this little peak right here that we had seen in April. Maybe run up beyond that for a day or so, and then to pull back even down towards 109.5, 109, and then build some energy for a breakout that could sustain. The problem with looking at the market that way is a lot of times you don't get the pullback that you're looking in for, and instead the market will continue to move higher. So you have to look at it and say, at what point are you no longer comfortable holding a pullback? Well, the rising 5-day moving average is an excellent place to look to move to the sidelines if it breaks that. The Russell 2000, we were talking about this trend line that was really represented by, it's not just one trend line. It's if you could draw that line a lot thicker like we have it here, then you can see that this is what made sense, was this band of downward sloping resistance over the last month and a half. And you can look at this now also as this is a shoulder, this is a head, and this is a right shoulder with a descending neckline, which is a very common thing. If that's the case, then in order to come up with a price objective, we'll measure very conservatively and just call this 109. And to the height of the pattern, so going straight up from 109, we go straight up to the neckline, which is at 116, we'll call it. So that is 7 points, and so we would add 7 points to the breakout level of 115, and that gives us an upward objective of 122 in the Russell 2000, and 122, of course, would take us beyond the highs of the fourth quarter last year. Now, I don't think you just buy the market with that upward objective. This is last fourth quarter of last year. This is likely to be a level of potential resistance, but for now, the important thing is we have bullish structure to the Russell 2000, and if it's to pull back, I would be thinking that you would want to see it hold, somewhere around in here, and then on the way back up would be the time to get long and raise your stop underneath the most recent relevant higher low for whatever your particular time frame is. Semiconductors, I thought we're going to kind of turn sideways in here a little bit, but huge volatility in these semiconductors. It really makes it difficult for trading, but we're heading towards the all-time highs in the semiconductors here as well after seemingly being rejected pretty hard 2 weeks ago. We came down quickly, rallied, and we're just seeing a lot of volatility basically. But on the intermediate term, the buyers are back in control with the market above that rising 5-day moving average. Biotechs continue to rally here. They've gone, right up to really here, just slightly through the year-to-date volume-weighted average price, and this is kind of the midpoint of the bigger range that it's been involved in for almost the entire year. So we found support down at the level where it looked like it was getting ready for another leg lower. But the point is, when you look to sell short after a breakdown, after a move of the magnitude that it had, 287 down to 240, you have to ask yourself, where has it come from? So selling short down there is not a good idea, just as buying a breakout to a new all-time high is not a good idea in the S&P 500, because it's already just expended energy rallying 6.5% over the last week. So people who buy breakouts up there are most likely going to end up spitting it out lower, similar to the people who sold short down here. They end up covering at a higher price. We're in the midpoint of this range for the year. I really don't see a whole lot of advantage to trading the Russell, not the Russell, but the biotechs here. But the fact is, we are currently, and this is for the first time in a while, that this week we saw that we have a pattern of higher highs and higher lows above a rising 5-day moving average, which means selling short in that environment is just as dumb as buying in this environment. We did not see a pattern of higher highs and higher lows above that 5-day moving average. It had the opportunity to turn over there, but instead it gapped lower. That was the Brexit, of course, and now the buyers really, in my mind, gained back that control right here. We're not trying to pick the bottom, the exact turning point. We're trying to get involved in the trend and realize what those trends are and when to be involved. Apple this week gained a little bit of ground. It got back up above the volume-weighted average price from that shakeout low from that failed move that we had seen back in May, came that fast move higher. And again, it shows you that, the people who sell short on the emotional moves after the market has already been extended will often get hurt badly as the market reverses quickly in the other direction. Now, what do we see in Apple? I mean, I guess we could call this somewhat of a triangle, and we're getting up towards the top end of that. I continue to believe that there are better stocks to trade than Apple right now, but it is back above that 5-day moving average, making higher highs and higher lows. So as always, you've got to do what is appropriate for for you. We had some great stocks in Alpha Trends this week, including buying AMBA the other day right over here. We had KERX on the long side. We had a nice short in, oh, I forget what the heck what it was, even 4 days. It seems like so long ago. But anyways, that's going to do it for me. I'll wrap it up here. Hope everybody had a good week, and I'll talk to you next week.